Are there other types of investments besides stocks? Yeah.
Yes, there are other types of investment. And I think I'm going to use a lot of analogies today.
It's okay. Yeah.
So let's imagine we are going to Mombasa.
Yeah.
Okay? You have a meeting in Mombasa in the next 5 hours. Let's call it 2 hours.
Okay.
You need to be in Mombasa in the next 2 hours for a meeting.
Yeah.
Me, my meeting is tomorrow. Which mode of transport will you choose?
Aeroplane.
Aeroplane?
Yeah.
Isn't that obvious?
Yes.
And me? What can I use?
Maybe SGR.
I can do SGR.
Yeah.
Isn't it? Eh?
Yeah.
So, when you buy a stock or a share,
Yeah.
it means you desire to grow very fast. You want your you want to become rich faster.
Yeah.
You want the thing that gives you the best return possible. So that's what a stock does. It makes the richest people in the world own stock or own shares. Can that settle in first?
Yes,
before we look at the others?
Now I'm wondering, to become rich faster, what about the risks that can come with that also?
Now, thank you very much for bringing the other side of it.
Yeah.
Everything has a double-sided. It has the other side of it.
Yeah.
So the return is very good. So if someone gets on a plane, they will be in Mombasa in the next 45 minutes. 45 minutes.
Yeah.
Now let's look at the risks of being on a plane. If the engines fail, yeah, or there is some terrible weather that they cannot navigate, when if that plane crashes, is a different story.
Yeah.
Isn't it? Eh?
Yes, it is.
So, high return, high risk, high return.
Yeah.
High risk, high return. Yeah. So that's a stock. So the stock is the same thing.
Yeah.
When that company is not doing well, maybe a new competitor comes in.
Yeah.
They slash their prices. So all customers move to the competitor. Safaricom, gone.
Yeah.
So we have seen the price of Safaricom. It moved from 44. It hit 13 at some point last year. I think now it's still below 20 right now.
Yeah.
But can you imagine somebody who bought it at 44?
Slightly expensive.
The person who bought it at 44 and is holding it today at 18 shillings or 17 shillings, they have lost more than half of the money that they put in Safaricom. And that is the risk they took because they wanted to grow very fast.
Yeah.
Yeah.
Okay.
So it's very important to, first of all, appreciate a stock gives you one of the highest risk, but also it can give you the highest return. And I would also want to put Bitcoin in that Bitcoin and cryptocurrency in that bracket. They also will give you a lot of money, or it can reduce your money significantly. High risk, high return.
Oh, okay.
So because not everybody has a high appetite for risk, there are other ways of investing. So you can also invest in treasury bills and treasury bonds. I know you can see, please ask the question.
Mostly it's the definitions.
What is a,
Yeah.
So the government, the government of Kenya or any government, they usually come to the market to borrow money.
Yeah.
And when they are borrowing money, they exchange, what they sell are treasury bills and treasury bonds.
Yeah.
It's a way of the government borrowing money from the public.
Oh, okay.
So they give you, here is your treasury bill, you give me your 10 million.
Isn't KRA enough for borrowing money at some point?
Yeah?
Yeah.
So KRA, now thank you very much. I really like that you're bringing all these things together.
Yeah.
KRA's work is to collect taxes, which is one of the biggest revenues of a government, to run a government.
Yeah.
But then that goes to the revenue. The government also has expenditure.
Yeah.
And most of the time, the expenditure of the government is higher than the revenue it collects.
True. Yeah.
So how does it meet that gap between the revenue and the expenditure? They come and borrow from the public.
Yeah.
They sell treasury bills and treasury bonds, hoping that when they collect taxes to next year, they will pay
it back.
They will pay it back.
Do they?
They
That's
do.
the question.
So far, they do.
Yeah.
They do. They do.
Yeah.
So, treasury bill and treasury bonds are considered to be among the safest investment options that one can find.
Yeah.
And it is because they are backed by the government. And why is it safe with why is the government the safest place to put money? Because the government can collect money from anyone.
Yeah.
They can today they can wake up and say that we are going to tax every coin that is in the bank account. We want to tax it.
Yeah.
You get it?
Yeah.
They can increase taxes on people who are employed. So the government is a huge machinery. It can collect money from anywhere. Imagine if you had that power.
That's interesting.
You can go out here this door and you tell everybody, I want 10 shilling. I am the government.
Yeah.
If you don't pay me, you cannot live here peacefully. That's the power of a government.
So technically a huge landlord.
Yeah, that's I love it. Wow. So yes, government is a huge landlord. It's a big landlord. In fact, is the ultimate landlord of the country. And we have to pay them rent every month.
Yeah.
And that means they own everything.
Yeah.
And therefore, when they borrow money from you, you can be assured they're the safest to lend money to, because they can get money from anyone and from anything. Anyone who lives in there, anyone who is a tenant there. Yeah.
Oh, okay.
That's okay.
Yes, that's
so
okay.
Treasury bill and treasury bonds. So how do treasury bills work? They say, give me a 10,000 bob.
Yeah.
I'll give you 12% every year.
Yeah. Okay.
Now that one, you see, is not like a stock. A stock does not promise you.
Yeah.
A stock is like, let's find out. Yeah. A treasury bill and treasury bond, they will promise you a fixed return.
Yeah.
And they will pay you that return for the year. But they divide it into two. Every half year, they pay you.
Yeah.
They pay you what you call a coupon, the interest. Yeah. Okay.
Okay.
So that's another option. Another option is real estate.
Actually, I was asking about that, and I was being told I'm too young to have full explanation about that one.
Yeah.
Yeah.
So real estate is also an investment option. So the government is the big landlord.
Yeah.
But you also own a piece of land within that country.
Yeah.
You can do apartments, or you can do a small place to rent out.
Yeah.
And every month, those people, they owe you what? The tenants owe you rent.
Yeah.
So they pay you rent. So a landlord, when you invest in real estate, you get paid in terms of rent. And also, if the value of the property goes up, you can also be able to experience an upside in your wealth.
Yeah.
Yeah, because you can maybe you bought it during, I don't know, you were born during Kibaki's time.
Yeah.
Kibaki's time, right? You were born during Kibaki's time. During Kibaki's time, the value of land was just going up very fast. You could buy land today for 100,000. Then next month, people are buying it at 150. So you flip it to get 50,
Yeah.
you have 50,000 bob extra. That's the capital gain.
Yeah.
Capital gain.
Gain.
It's your capital that has
Gained. Yeah.
So real estate is another one. You could also, even the way government comes and borrows money from the public, also companies come and borrow from the public. When they borrow from the public, what they sell is called a corporate bond. So the government one is called a treasury bond. When a company borrows, it's called a corporate bond. So like a East African breweries, one of the biggest companies in Kenya, has been borrowing from investors. They float a bond, we give them money, they give us a paper called a bond. And as long as that paper remains, they have to send us money into a bank account every month. So it's like a rent. Yes, it's like another rent. So there are many types of investment, but those are some of the most familiar ones.
Whew, the information.
It's a lot.
Yeah, it's a lot. So with all that information, I'd like to know where the MMF comes in, the money market fund, when it comes to the different types of investments apart from stocks.
So thank you for tying that in. Now, because we're talking about an individual here. You have let's talk about Kelly. You are either in school or you're working, isn't it? You don't have the time nor the expertise to go and find which treasury bond is best for me. Isn't it? Or which stock is best for me. Or which corporate bond is best for me. Or when is the right time to buy cryptocurrency. Isn't it? It's just too much. Isn't it? And also, you don't have the financial muscle to compete with the banks who are buying. Guess who buys the treasury bills and bonds? The biggest buyer is actually the banks. So when you go and put our money in the bank, the number one place they take their money, they lend to the government, because the government is the biggest landlord in the country, and therefore the safest to give money to. Thank you for bringing that big landlord idea. So that leaves you and I, common man, very difficult to compete with the banks or the fund managers. So what the fund managers have done is that they've realized, Kelly does not have the same advantage as the banks. So we are going to form a product called money market fund. That money market fund, we are going to have Kelly, we're going to have Pius, we're going to have as many individuals as possible who are putting 5 bob, 10 bob, 100 bob, 1,000, okay? We pull that money together. And when we put that money together, it becomes billions. And when it becomes billions, guess what? We have financial muscle. And when you have financial muscle, now we go and lend to the government. The same terms as the bank.
So the easiest way I can put that is kind of like a harambe in a way.
Correct.
Put it together. Then you kind of give to the person who you've collected the money for.
So now, all of us, we speak with one voice. We go to the market. If you don't have 100 million, you cannot buy, you cannot get the best price in the bond market.
So it's conditional.
If you don't have 100 million. So, but when you have your 5 bob and another 5 bob, and so we are so many of us, we have 100 million, we have 1 billion. We get the same pricing as the bank. And when that pot we have done a harambe with, that pot is called a money market fund.
That makes a lot of sense. Because you go to the internet, you'll start explaining, you're like, what? You're asking for more information is not giving.
So when someone comes and tells you, we are doing a fundraising, what does that mean?
where
people are
contributing.
And that's why it's called a money market fund. It's a fund where individuals contribute into that fund, and then that fund now goes with one voice representing all these people, get you the best price. And then now when we get you the best price, we come again, we share according to how much you invested. The one who gets 5 bob, the one who invested 5 bob, they get their share of 5 bob. The one who put a million, they get a share for putting a million. It's on a pro rata basis. We distribute that interest to everybody. But now their money is earning much higher than what they would have earned if they put money in the bank. So a money market fund is another way of making sure that you're putting your money in a safe place, but you're earning higher than what you'd earn in a bank. Because that's what the bank will still do with your money. You take your money, go and lend the government. Why not lend the government yourself? And get the return from the government yourself. The money market fund is our way of representing. It represents us. It represents people who are financially weak. It represents people who do not have the knowledge, the financial knowledge, like the people in the bank. So guess what? Pius is speaking on behalf of thousands of customers and saying, I want Kelly to be given the same rate that you're giving KCB. I want, and these are my facts. I have negotiation skills. Yes. So I negotiate on your behalf. And that's why you see the more people who have discovered money market funds, this has been one of the booming seasons for money market funds, because people's eyes have just been opened. Oh my gosh, I can earn more money than in a bank. Now the other thing is this: if you put money in a bank and you don't negotiate, you don't earn anything. You get zero. Zero. If you put money in a bank and you don't negotiate with them, they will not even remind you that you're earning zero. Because their job is not to invest for you. Their job is to get deposits and lend to the government and lend to companies and make the best returns for their shareholders. So they don't really work for you. But if you put money in a money market fund, you don't even ask what rate it is, you start earning from that day. Because the fund manager works for you. So you can see what does a money market fund invest in? Treasury bills and short-term treasury bonds.
Short-term?
Yes, meaning not more than 18 months. So a treasury bill, maybe let's define what's a treasury bill and a treasury bond. A treasury bill is you will lend to the government for 1 year or less. That's a treasury bill. A treasury bond you will lend to the government for 2 years or more. That's a treasury bond. So the difference is how long you are locked in. Yes. So, but then there are also, beyond the money market fund, is fixed income fund. So the money market fund is for those people who want to access their money as quickly as possible when they need. So that's another amazing investment option. For me, money market fund is almost hand in hand to a bank account. So when I have excess money in my bank account, I sweep it to money market so that it can be earning. But if I don't need that money quickly, I put it in a fixed income fund, which in fixed income fund invests in treasury bonds. Money market fund invests in treasury bills and bank deposits.